Hello, my name is Matt Kopsky, and I am President and CEO of HM Capital Management. At this time last year, investors were licking their wounds after the S&P 500 dropped 20% in the last few months of the year. As 2019 began, investors were very fearful of a global recession and a trade war with China. These fears were gradually put to rest, starting with the Federal Reserve lowering interest rates 3 times during the year. Another positive came in the form of encouraging economic data, which alleviated concerns of a slowing global economy. Lastly, the United States and China finally reached a trade agreement, calling it Phase 1 of a longer-term trade pact. All these positives led to significant gains in stocks, with the S&P 500 index climbing an impressive 31%. The tech-heavy NASDAQ composite led all major indices, gaining 35%. International shares lagged most of the year, but narrowed the gap in the last few months with a gain of 22% for the year. As we begin year 2020, investor sentiment has shifted away from the fearful levels we saw at the start of 2019. This is certainly not the time to be overconfident, but the low level of inflation, low interest rates, a strong employment picture, and a healthy consumer economy give us the confidence to stay the course and look for further gains in stocks. What can investors expect in 2020? First, markets are overdue for a 10% correction. While such corrections are unpleasant, patience will be rewarded. Earnings for the S&P 500 companies are expected to grow 8 to 10% in 2020. We think some of this earnings growth has already been built into stock prices. As a result, we believe stock gains for 2020 will be around 6%. Incumbent presidential election years are historically good for stocks. While this election year is likely to provide significant media attention, please remember, stock prices are ultimately driven by earnings and not politics. Finally, use the recent run-up in stock prices as an opportunity to rebalance your portfolio. For example, if you started 2019 with 70% stocks and 30% bonds, your portfolio is likely now 80% or greater in stocks. It would be prudent to rebalance your portfolio back to the target stock allocation. From the HM Capital Management team, thank you for watching.